Smokers, we got stock market news coming out like it's Blue's Clues today. Oh my goodness, guys, we got so much stock market news. I'm posting 3 videos today. New record in the history of the channel. This first one centers around the Federal Reserve, okay, and some comments that were made today. So first off, the stock market's ripping higher today. As of taking the screenshot, it was up about 475 points. I just looked right before I started recording this, and the market's up 550 points. Talking about it could be the best day we've had in about 8 months. So very big day for the stock market in general. Fed Chairman Powell now sees current interest rates level just below neutral. Federal Reserve Chairman Jerome Powell said Wednesday he considers the central bank's benchmark interest rate to be near a neutral level, an important distinction from remarks he made less than 2 months ago. He says here, quote, "Interest rates are still low by historical standards and they remain just below the broad range of estimates of the level that would be neutral for the economy. That is neither speeding up nor slowing down growth," Powell told the Economic Club of New York in a speech being closely watched in what has become a volatile financial marketplace. The chairman's observation on rates in early October helped set off a rough period, obviously, in the stock market after he said the Fed was a long way from neutral. Major averages dipped briefly 10+%, as we know, and so the change in tone here from being we're far away from being at a neutral place to all of a sudden now we're at a neutral place where interest rates aren't slowing down the economy, they're not speeding up. That makes investors feel a lot more comfortable out there. The Fed funds rate, which is tied to most forms of consumer debt, currently is in the target to 2% to 2.25%. Markets broadly expect another quarter-point hike in December, but there's been a wide disparity between investors and the Fed where rates should head in 2019. Traders have priced in at least one increase, but the Fed has talked about maybe doing something around 3 rate hikes. Now, Powell did have some scary remarks here, okay? This is a little scary, this paragraph here. Information on individual firms reveals that over the past year, firms with high leverage and interest burdens have been increasing their debt loads the most, he said. In addition, other measures of underwriting quality have deteriorated and leverage multiples have moved up. Some of these highly leveraged borrowers would surely face distress if the economy turned down, leading investors to take higher than expected losses, developments that could exacerbate the downturn. However, he noted that the dangers posed appear to be limited to non-financial firms, so that's big, and that the threat to the larger system seems limited. Stock market, he said, current valuations are about normal with long-term levels and that we do not see dangerous excess in equities. I would 100% agree with that. Instead, he identified higher risk corporate debt and commercial real estate as high relative to history, all right? So saying, corporate debt and commercial real estate risk is a little higher out there right now, okay? Now, so those are some big remarks out there, and as always, guys, you've got to be paying, whenever you're investing in companies, always pay attention to those balance sheets, see where these companies are at debt-wise, and especially in relation to what they have in their balance sheets in cash and short-term investments, long-term investments. I always preach about this. I know it's a lot of people don't pay attention to it when the economy's good and everything's on the up and up because companies are making a lot of profits, but I'm just telling you, the dark day will come eventually. We have no clue when it will be, but the dark day will come. We will go into a recession at some point, right? And a lot of these companies that are just loading and loading and loading up in debt that all of a sudden are profitable right now and might end up starting to take losses. A lot of those companies are going to get into a lot of trouble, guys, because they're not going to have the cash around to pay off those debts. A lot of those companies are unfortunately probably going to go bankrupt, or their businesses are going to be leveled where they actually have to start disposing of different other business assets and whatnot. So always pay attention to those balance sheets is what I always preach. Now, as far as the stock market goes, obviously there's been 2 things holding back the stock market for pretty much all of 2018. What's really hurt the stock market over the last few months. The first one is obviously in the interest rate drama. We have a little bit calming down there. Okay, we'll have to see what happens. They're still talking about possibly maybe 3 rate hikes in 2019. We'll have to see if that actually happens, right? I think the Fed should just go with how they think the economy is going overall, and not just say, oh, we're going to for sure do 3 rate hikes or 4 rate hikes or 2. Just kind of play it how it goes. That's my personal opinion. So we have a little bit more clarity there, and that makes the market feel a little more comfortable. And the second part is obviously the China-U.S. trade war drama is another thing that has held back the stock market in a major way this year. If we can get, if we could just get a little bit of USA and China working together to get something done. We're not going to solve the trade war. I 100% am not believing we're going to solve the trade war anytime soon, okay? That's going to rage on for a while. But if there could be a little agreement between the USA and China, that would give the whole market a sigh of relief that something could happen there, that progress can be made between the two countries, okay? Just a little something, okay, as far as the trade war goes. If we could just get something there, that would make the markets feel a lot better. The tough talk and all that, it freaks the markets out. So, but if we can get interest rates to stop scaring the stock market so much, and if we can get the U.S. trade war with China to calm down just a tad, these markets are set up where they could explode higher. But the question is, obviously Trump came out earlier in the week. He said it's highly unlikely they get anything done on the trade war. Word choice like that obviously is a little bit scary and certainly isn't the best for the market. He could have just been tough talk negotiation type tactics there. We're going to have to see. Obviously, him and President Xi are supposed to meet on Friday, so we'll have to see if anything comes of that. I want to hear your guys' opinion down there in that comment section. What do you think the Federal Reserve should do? You think they should hike rates, 2, 3, 4 times in 2019? Do you think they should play it how it goes? Do you think they should do maybe just 1 rate hike or 2 rate hikes in 2019? I would love to hear from you guys. As always, 2 more videos coming today. Thank you for watching and have a great day.